during the past week, US dollar suffered versus almost all major currencies except the British pound. We can see here that GBP USD currency pair made a small decline, while US dollar weakened against the euro, Japanese yen, Swiss franc, Australian dollar, and also we have metals here, and gold made a strong advance versus the greenback. The week of losses for American currency was caused by the results of the Federal Reserve's meeting. I can remind you that American Central Bank left the federal funds rate unchanged in the current range between 0.25 and 0.50%. The Federal Reserve signaled that it could tighten monetary policy by the end of 2016. But at the same time, the Fed projected a less aggressive increase in rates next year and in 2018. And it also cut a long-term interest rate forecast from 3% to 2.9%. As a result, on the one hand, the Fed still looks likely to raise rates in December, and this fact provides support to the US dollar. According to the futures market, the probability of such outcome accounts for a bit more than 50%. On the other hand, the lower projected path for interest rate hikes in the US decreased the overall demand for the greenback. So, in my opinion, we see that there was negative effect on the US dollar after the September meeting of the Federal Reserve, but I believe that this effect will be moderate in the medium term because, as we have discussed in the previous week, no one really thought that the Federal Reserve would increase interest rates in September. The possibility of such outcome was rather low, around 15%. So as traders didn't expect much, they weren't very disappointed by the fact that the Federal Reserve decided not to raise interest rates in September. If you look at the possibility of December rate hike, it is still not priced in fully. There is potential for more growth of these expectations and more growth in the US dollar. And once again, everything depends on the incoming data from the US. The Federal Reserve will be watching these data releases, and depending on them, will make its judgment about the December rate hike. But if the current trends in American data continue, I think that the main scenario will be that the Fed will raise interest rates in December. So in my opinion, the closer to December we'll get, the higher will the US dollar get. This week, we'll have another factors which will be the main movers of the Forex market. I mean the first US presidential debate and the Global Energy Forum in Algeria, which will set the further path for the dynamics of oil prices. Also, we'll get some releases from the US, but this I expect won't be the main driver of the market. So how is the market positioned? We can see that the recent data from CFTC, Commodity Futures Trading Commission, which were released on Friday, show that the market's positioning ahead of the Federal Reserve's meeting was more or less positive. The overall USD net long position increased. I remind you that this data from CFTC come with the time lag. So these are the data for the week which ended on Tuesday, September 20th. And here we can see that after the Federal Reserve's meeting, of course, this positioning has changed a bit, but still we can have some valuable insights from this data. For example, we can see that the aggregate USD position, although it is in the positive territory of net longs, it's still not as big as, for example, in November 2015. So there is scope for increase in the US dollar bullish position. This is also another reason to think that the decline of the US dollar currency should be limited. If we look at the sentiment towards other major currencies, we can see that bearish positions on the euro increased. It was the week before the Federal Reserve's meeting. We have a rather large position in euro, and I think that the next meeting will show us that this position declined. The bearish sentiment towards British pound decreased. We saw some correction in British pound to the upside. However, the reduction in negative position on the British pound, we see that the market players, the bears, those who want to sell British pound, will now feel more eager and more free to enter new short positions and to once again sell the British pound. We had a correction at the market, the squeeze of short positions, and now we have better levels to sell the British pound. Also, we saw some increase in bullish position on Japanese yen. Maybe there will be some changes after the Bank of Japan's meeting, but the results of this meeting are kind of controversial, and I am sure that even the most up-to-date market players, some speculators which are ahead of the market, still haven't decided on the opinion they have about the results of this meeting, because the current stage of the Bank of Japan's monetary policy is kind of complicated. We can see that the central bank has already done many different measures, and now there are slight changes in these measures, and the market players don't know how to react. These changes in the Bank of Japan's policy will make an impact on the state of Japanese economy, on the state of Japanese inflation, and on the yen consequently or not. It is still to be decided in the forthcoming weeks and even maybe months, because really it is very difficult to judge the Bank of Japan's policy at the current moment of time. So these are the main trends in markets positioning. We can see that the US dollar index, which tracks the dynamics of American currency against of 6 other currencies, which are the currencies of America's main trading partners. Well, here we have a kind of consolidation for already several months. And we can see that after the Federal Reserve's meeting, there was a spike to the downside towards 95 points. But then US dollar recovered, currently returned to the middle of its consolidation range. We can see a triangle here at the chart of the US dollar index. And I expect that the sideways dynamics of American currency will continue this week as well. We may see US dollar gain versus some currencies, decline versus other currencies. Probably the declines will be the main move of the US dollar, but still I don't expect these trend lines, these triangle lines, to be seriously violated during the coming trading days.